It was a big day today for General Motors and the U.S. taxpayer as the formerly bankrupt company went to the market with its initial public offering. So how did it go on day one? Greg Flick is with Edward Jones. He joins us in studio live with more. Greg, thanks as always for your time. The hard numbers, they were up $1.19. They closed at $34.19, up 3.6%. A good day?
A good day. The stock is public. Shareholders had the ability, the public had the ability to become shareholders of General Motors, and more importantly, the U.S. Treasury, the UAW, and the Canadian government got to begin the process of selling some of their shares and reducing their ownership position in General Motors.
Now, to break even, the Treasury says that they need to sell the remaining 500 shares at $53 each in the months and years to come. We heard the president speak a little earlier. He thinks that's within the realm of reality. Are you buying that?
The market's going to dictate. When you bring a stock public, it's a vote from investors what they think the outlook looks like. And for professional investors to be betting on General Motors, it's a bet on economic recovery. It's a bet on return to consumer spending. There's a lot of pent-up demand for automobiles. Those sales have been off, as we know, for the last couple of years. And so individuals, pension funds, mutual funds are taking a look and saying, although it's a cyclical industry, we're looking ahead, and our hope is that they're going to be able to perform better going forward than they've performed over the last few years.
Did GM's IPO today drive the overall activity on the market? Was that kind of a rah-rah feeling there on Wall Street?
There were some other things that took place on the international front, with Ireland working out some issues that they have with debt. But it certainly gave positive energy, positive momentum to the market today to have an offering, the second largest in history in the United States, come public.
You know, as a investor, sometimes you think, hey, this might be the next big Google, IBM, but those stocks, those IPOs are very rare to turn out so well and to do so well down the road. Is there a danger in getting caught up in some of that euphoria here with GM? Could they see this price start to shrink because they haven't worked out a lot of their financial issues in the internal company?
There certainly are some major issues. There's $38 billion worth of unfunded pension and health care liabilities. And as we saw in 2008 and 2009, the automobile industry is a very cyclical industry. And if you're concerned about your own finances, you drive that car that you have for another year or two. So the outlook is somewhat guarded, as was indicated by the performance of the stock, up 3% today. But as a taxpayer, the government is beginning to exit their position in the company, giving that ownership back, and that's a good thing.
Yeah, it is. And as a Michigander, we like to see this happening.
Absolutely.
Absolutely in our backyard. Greg Flick with Edward Jones. We appreciate your time today.
Thanks, Brian.